let's welcome on board Gurmeet Chadha as well and find out what he's making of the market right now. Gurmeet, hi, afternoon. Good to have you on the show. Firstly, tell us, how is it that you're coping with the Delhi heat? I believe it's already touched, what, 50, 52?
Yeah, staying indoors, praying that the monsoons come in early, and buying some consumer durables, especially the AC makers. Combination of that.
Managed to get your hands on them because what reports we are hearing suggest that there's an acute shortage of air conditioners and other consumer durable goods.
Yeah, so there is a shortage. The discounts have virtually disappeared. Also, not just with air conditioners, also refrigerators and even air coolers. So we are looking at something like Voltas. Obviously it did well, and then the result disappointed, especially the EMPS space. Also, I think with per capita spend going up, I think fast moving electrical goods, home improvement and auto tend to do well. So if you compare and draw parallels to, let's say, China, which had, let's say, a 15-year period where per capita GDP grew by 13-14%, the consumer durable segment grew like 20%, auto did 26%. So I think it's a more a long-term play there, and any tactical opportunity like this, extreme weather conditions just probably gives you a better entry point.
Right, okay, indeed. But Gurmeet, what about the rest of the market? Just what, 20 minutes and then Monday morning we're going to be reacting to the exit polls. Do nothing, you would say, till the June 4th decision?
No, I would say, just stick to your plan. I think what we have seen is that I think you have to work on probabilities in market. If you are an equity investor, for 100% probability, there is fixed deposit, right? So you have to work on probability. Our stance is there is a very high probability of continuity in government. I'm not a cephalogist, so I have no idea in terms of how many seats they will get. But there is a high probability of continuity. And I think our stance of buying on dips so far, I think this has paid off in last couple of years. So market has given great opportunities in financials. I think Bank Nifty has really struggled despite good earnings growth. And I think with 10-year dropping, cost of funds dropping, I think you will see eventually financials coming back. This very strong order book on capital goods. We've seen excellent numbers from ABB, from Siemens. I saw Cummins numbers yesterday. That's another theme, which I think we are in a strong investment cycle. So I think stick to basics. Event risk, we are not on the technical side, but I think a market going into an event with FIs being so short and light, and my technical friends on the panel can tell better. I have not seen this kind of bearish positioning by FIs for a long time. So I think it is good if you head into an event with very light positioning. It augurs well, and my sense is I pray for continuity, and that's the reason we've been buying on dips.
So that's a very clear conviction coming in. But yes, either the FIIs are sensing something which we don't know, or the market is not factoring in yet, or we are poised for a bit of a short covering. But all will depend on what happens on June 4th, or which direction at least the exit polls take come tomorrow evening. In terms of the big movers right now, Techno Electric stock is up 17%, Jindal Stainless is up 12%, BKG Foods has seen a solid rally of 10%. Policy Bazaar, DB Realty, Vesuvius India, all of these stocks are flying away, and I'm not even naming the Adani group of stocks because they have been on a high from the last half a day or so, and BSC2 has actually managed to perk up in the last few minutes. In terms of the other internals of the market, what is your view, Gurmeet, as far as the entire auto sector is concerned? Because the data is expected tomorrow. Any surprises that you're waiting by for?
No, not really. I think, as I said, I pointed out, we expect auto to do well, especially the four wheelers to do well. If you see the numbers, I think we are barely crossed. So four wheelers, we have crossed 2019 numbers. Two wheelers, we are still 10-15 lakh units short. We did what, 2.35 crore units in 2019 pre-COVID. We probably did this year, I think 220 if I'm not wrong. So I think we have a long pending demand, and there is some valuation comfort, especially may not be as much in TVS after the run up, but there's some valuation comfort in Bajaj and Hero. And there is a lot of good ancillaries. Sandhar reported very good set of numbers. Their two-wheeler, four-wheeler mix is now almost 50-50. They are market leaders in locks. They're doing very well on the cabin, the castings, fabrication portfolio, and they're trying to build more EV portfolio. So that's something which we like. Uno Minda again has almost a 45-55 mix of two-wheeler, four-wheeler, great content and premiumization per play. And it offers you all three features. One is convenience, which is your switches, and basic features of the car. Then there are safety features like sensors, airbags, and then you have the premium and the content features in the EV portfolio. So they're adding a lot of new capacities, alloy wheel plant getting fully operational this year. So we're playing that, and we are liking four-wheeler space. So we've been adding Tata Motors with some correction, which we have seen recently in the portfolio.
Right. In fact, let's hear it out as well from Kirloskar Pneumatic, and they remain pretty optimistic about growth across all verticals.
So the growth is going to be across all our three verticals: the air compressor business, the refrigeration compressor business, and the gas compression business. And this is coming from the traditional industries: oil, petroleum, fertilizer, general engineering, etc. The compression segment delivers a profit in the range of 18 to 20% EBIT. We expect to continue in this area. The company's EBIT margins are directionally moving towards 18, and it will go there with increased volume as well as better product mix.
Right, okay, that's the word coming in from the Kirloskar Pneumatic Management. And let's just take stock of some of the other movers as well. Titan, for instance, the management commentary this time around indicates that, the jewelry segment's got a market share of about 10 to 11%. Eye care, they aim to achieve about almost 2,000 crore rupees revenues by FY27. So that's one stock which is in focus. The underperformer today, of course, has been Zomato after Macquarie putting an underperform rating on Zomato, saying that the competitive intensity is only on the rise and they continue to see downside to the consensus estimates. Gurmeet, what's your take on Zomato? It's consolidated around 180 for a while now. Today it's dipped sub that level, but do you think that peak of 200 plus is way gone for Zomato?
No, we are actually quite constructive here. I think so barring the food delivery business where contribution margins now continue to be above 6, almost 6.3%. Quarter on quarter, if you see the gross order value is picking up, and they've added a minor convenience fee, and they're giving now different experiences like bulk orders and vegetarian meals, etc. Mind you, they have their own rider fleet upwards of 12,000. And I think the dark horse has been Blinkit. I think it's EBITDA break even now ahead by 2 quarters. They guided for FY25 end. And their contribution margin also is now picking up. It's already around 3.2, 3.3 if my memory serves me right. And the average ticket size is improving as you move from groceries and convenience to gold bars, electronic stuff, etc. So I think Blinkit put something which quick commerce can really add significant there. And I think, mind you, they have huge data analytics, and so they can pivot and do better. Hypersure also seems to be doing okay. So we are actually very constructive both on Zomato and Policy Bazaar as some of the new age businesses we are actively looking at adding in our portfolio.
On some of these counters, but let's take the BTSC trade, and today's BTSC trades are going to be very, very important and critical. Aditya, what would be the BTSC trade on the index and on stocks?
First pick would be on Policy Bazaar. We have seen good action in this counter recently. Today there was MSCI adjustment also. So one can buy Policy Bazaar at 1285, and stop loss would be at 1180, and target would be 1380. And the second counter is we have seen good consolidation and action in a lot of mid cap stocks. So, but one stock that clearly stands out is Adani Enterprise, which shows very high beta moves. So this one is a good buy at 3403, and stop loss would be 3200, and target would be 3600 to 3700. And a disclaimer is that I have recommended this stock to my clients, so one must do their own analysis before taking a financial decision.
Okay, that's the take coming in on some of the Adani group of names. Kunal, any strategies that you may have?
So I'll go with two buy calls. HDFC Bank remains to be the top candidate in the private sector banking names. I think at current levels of 1530, 35 approximately, it should close above the 200-day moving average also. That could probably be a good technical breakout factor for HDFC Bank going forward. So would suggest a buy with a target of 1570. Stop loss could be kept at 1500. And Dr. Lalpath Labs is something which is coming back into the breakout mode on the weekly, monthly charts. The stock forming an inverted head and shoulder pattern and being a lot more resilient, in this kind of a market also. So would suggest a buy with target of 2710. Stop loss at 2580.
The other sort of conjecture in the market is how long the entire PSU rally, especially, your defense, railways, etc., is going to last. And whether, again, the heydays there are over and are you going to see a massive bout of profit taking post the election verdict? What do you have to make of that?
I think two things. You have to differentiate now. I think there has been, obviously, it's been a great run for the likes of defense names like HAL, Mazgaon, Cochin shipyards of the world, Bharat Electronics, etc. And then you have, even SAIL, let's say, outperforming Tata Steel, by a huge margin last year. So I think valuation comfort is now receding. You have a lot of these PSUs now trading at 50 times. HL is almost 45 times. Bharat is upwards of 50 times. And there's a lot of this business is lumpy. Now HL could be an exception because 60% probably comes from service and maintenance. So there's some bit of continuity there. But there are a lot of risk and offset clauses in a lot of these defense contracts. And you can have some bit of bumpiness, and some delay in orders happening or some recall happening if there are technical issues. Right. So I think got to be a little more selective. So I would prefer right now incrementally, let's say, going towards, names like PSU banks where I think there is still comfort, like SBI is still 1.2, 1.3 book value, Bank of Baroda is around book value. And I think the ROAs are now 1% and above now for a sustained period of time. Similarly, on railway defense, there's no harm in probably taking some money off the table post-elections. There could be a bit of a bump if there is continuity. But I think some part of the portfolio now needs to be moderated. Similarly, a lot of power finance companies, if you see, are trading at 4 times book. Now, you have HDFC Bank trading at 2 book and let's say ICICI at 2.7, 2.8 book. So I think at some point of time, some rationality will come. So no harm in trimming 10-15% of the PSU portfolio and maybe being a little more selective post-elections.
A little bit more selective and no harm actually trimming positions there. In fact, that's exactly the question that we posed to a whole host of market men and CIOs as well. Here's what they had to say about it.
PSU space that we are in is mainly the oil and gas space. Some of the banks are there with us. And obviously some of the defense players are there with us in the PSU space. So I think even if there was some amount of uncertainty, these spaces are quite sanguine. Probably oil and gas would have been a question mark. But still we believe that given that the budget is going to be in July, there's still a lot of steam left. Even after the election results are out, I think the run-up to the budget should be good.
PSU banks is something we have been quite positive and we continue to remain positive. But let's say for that example, oil and marketing company, we have not been at all buying because the governance is not fixed. It's a lot more political. So government interference keeps on happening every time price of oil goes up and down. So we basically prefer where there's a tailwind of the sector, when there's a least government policy interference is happening, it's more run by the individual banks, individual organization, then the leadership of the organization has to be good.
Okay, so that's about the CIO, a verdict on the entire PSU pack. But take a look at the market in the last 15-30 minutes. Yes, there has been an impact of that MSCI flow, but nonetheless, a sharp recovery when it comes to the Bank Nifty, almost 1 percentage point. And the mid-caps too have managed to rally quite hard. So on Nifty, it's not quite visible, but I think it's on Nifty Bank as well as the mid-cap index. And I think large part of that mid-cap index, rally would also be perhaps on account of those flows that might have come in. So Nifty has managed to, Nifty Bank has managed to be past that level of 49,000, and the Nifty 2 has managed to inch on further gain. The mid-cap index now almost 600 points off the lowest point of the trading session, but it's the frontline index which is very, very quiet. But clearly, Kunal, the volume is picking up just ahead of that important event. 7 minutes left for the trading session, and then come Monday morning, it will be one way or the other.
Yeah, it should be one way, not the other. Let's hope it's the bullish way.
It's for the markets, right? That's
one
what
way
we
up.
want for.
Yeah, it has to be
way
one way up. It's been too much of volatile over the last 1 week or so, and I think the best case for the markets right now is the volatility to subside. I think that's the only thing which a trader or an investor is looking out for, because then real patterns would start to emerge for stocks, for sectors. And the prices, they get in sync with news flow to try and react on the positive negative side. Right now it's completely unsynchronized in terms of price action. So I think that's the key data point to look out for. Yes, the last half an hour, last 15-20 minutes, the buying is on the back of much higher volumes, and good part is that the Nifty and the Bank Nifty both have come back about their strong psychological marks. Nifty has come back about 22,500 mark, and Bank Nifty above 49k.
Okay, that's the take coming in on where to place your bets ahead of the exit polls. In the meantime, it's, you can't really pin up or rather pull up any decisive trend, so to say, in the market. Yeah, the Adani Group names are holding out. You've got an odd Bajaj Finance looking good. L&T is holding out. Some of the private banks, of course, not looking bad. HDFC Bank clearly right on top there. ICICI Bank, IndusInd as well, holding out well. SBI, not from the private lot, but that also has been, sort of matching shoulder to shoulder with the likes of ICICI Bank and HDFC Bank of late. Reliance as well holding about 0.5% higher as we speak right now. But Gurmeet, just wanted to get your sense in on, where do you think leadership will emerge next when it comes to the large caps and the Nifty constituents? Is it as obvious as private banks?
No, I think should come back as cost of funds come off. Maybe rate cut cycle towards the last half of the last quarter of the year. I think capital goods and I think infrastructure, I think in my view will lead. I think the commentary is pretty solid, and we have a slightly view now on rural recovery. So a bit of maybe while FMCG index today probably gave up some of it, but I think that's something you should play now. The rural recovery, a new government in place, more shops to there's some green shoots visible in the rural economy. So, some of the auto names, FMCG names, agrochemicals, they've been suffering a little bit due to China factor, inventory destocking now playing out. So I think rural recovery, financials, in my view, will lead it, and capital goods. So I think these are the three themes in my view. And there could be a bit of rotation, profit booking from the defense names, railway names, more towards these names.
Okay, Gurmeet, we'll let you go on that note. Thanks as always for taking the time out and joining in. Aditya, just wanted to get your sense in as well. I mean, I know lots will change tomorrow when the opinion polls come out. But just by your reading, we're managing to close about at that 22,730 odd mark for the Nifty futures. What do you think is in store on Monday morning?
So we are maintaining bullish bias for Monday morning. So we are going long on the market, and one can also, go long on the market with stop loss of 250 points. And target would also be about 250 to 500 points in next 2 days. So that's how we are playing the market, because when the exit poll numbers will come tomorrow, probably market will price in good numbers. So hence there could be a bump up in the market.
Okay, point taken. So Aditya's view is that go long. Kunal, what's your view? Still do nothing, or there is at least a bit more tilt towards going long now?
Yeah, so stock specific, the portfolio is long, would maintain that long bias. I think many of the stocks which I've highlighted, HDFC Bank, L&T, HUL, etc. I think these stocks have been doing reasonably well for themselves. So maintain the bullish stance over here, and buying Nifty as well as Bank Nifty in this kind of a scenario is pure speculation, and with absolutely no idea in terms of what could probably come out in the exit polls and how the markets could react on a secondary basis. So I think on that context, it doesn't make sense to just go for a speculative buy over here. But yeah, I think on the stock specific front, I would believe that there are a lot many better opportunities, even if these stocks show some signs of stability as well as going forward, some pickup in trend.
Okay. Well, just to mark what the globe is up to, because Europe hasn't had a very confident sort of start. Asia, of course, was okay, although markets like Hong Kong and Shanghai completely reversed their gains that they started off in trade with. And even the pre-market US rates are indicating a bit of a soft start. And this, mind you, is after a weak handover that we got overnight in any case from those markets. So yes, Adani names are right there on top with Adani Enterprises with a 7% move. Idea is put up very nicely, about a 4.5% uptick coming in for that name. Adani Ports, NMDC, GMR Infrastructure, Shriram Finance, HDFC AMC, BHEL, Ambuja Cement. These have all been large caps which have performed very well in today's trading session. Trent, eventually gave up its gains, closed in about 2.5% lower. Persistent as well saw some profit taking. Berger Paints, Ipca Labs, Divi's Labs, REC, Exide. These are all names which softened a little bit in trade.
Mark India Wix, because at one point of time it was down 5% and by the end of the day it's up 2%. So there's actually a move of almost 6-7% on India Wix on an intraday basis. It's actually nearing 25. So while of course the case is being made that post-verdict it will come off, today we saw initial signs of it, but that's not the case. The nervousness really continues, and look at the advance decline ratio. It's still favoring the declines versus the advances. So lacking conviction a bit, but still at least 22,500 was being held. In terms of the big movers, you had Techno Electric up 20%, Jindal Stainless ending the day with 14% gain, Adani Group of Stocks as we highlighted, Sundaram Finance as well as BKG Foods were big gainers, and BSE2 moved on heavy volumes. On the losing side, earnings reaction for Welspun and Ipca Labs. Page Industries was coming under a lot of pressure, and Berger Paints too, surprisingly, was down and out in the trading session. Vodafone Idea 15 crossed, a 5% up move. Zomato flip-flopping between the red and the green on account of more competition. So very interesting day it's panned out, but it will be more interesting in the coming week. You'll have exit poll, the final verdict of the democracy, the RBI policy and whatnot, because over the weekend you'll also get the auto sales data. It's going to be a crazy week, so let's take the break while we can. Have a nice weekend, all you guys from the team of Closing Trades.
If you like this video, then like, share and subscribe to ET Now.